This is the Martini Mortgage Podcast with Kevin Martini.
Hello, and thank you for tuning in. I am Kevin Martini, the branch manager and mortgage strategist with the Martini Mortgage Group at Benchmark Mortgage. And this is a very special episode of the Martini Mortgage Podcast. This is episode 12, the July 2018 edition of the Martini Angle. Now, before I dive in, I want to take a moment to talk about why I'm doing this podcast. To fully understand this, you have to understand me and my passion. With a very open heart, I believe that everyone has to have a roof over their head. I also believe that it is easier to create wealth with real estate than it is at one's job. Maybe in another episode of the Martini Mortgage Podcast, I will share my what and my how, but right now, let me just share my why. Every day, it is so very frustrating to me that some mortgage companies and some people in the mortgage industry believe and peddle mortgages, saying that they can help you with an app. It is my opinion that one of the largest financial transactions of your life should not be done with an app on a smartphone. I and the entire Martini Mortgage Group at Benchmark Mortgage truly believe you should know before you owe, and should not just be a spectator with blind trust that someone in a call center is giving you the best advice you deserve. At the end of the day, the lowest rate is not always the lowest cost of borrowing. The families we serve not only participate, but they lead their own destiny, and we help them with our reinvestment strategy, which is part of our lifetime loan program here at the Martini Mortgage Group. My why is very simple. I help my clients and my partners create wealth with real estate. I do the Martini Mortgage Podcast to simply and effectively communicate the options and current opportunity. It's an amazing opportunity right now. Before I dig into episode 12, I want to thank two very talented people that work very hard behind the scenes to make the Martini Mortgage Podcast available. Thank you, Alex, and thank you, Logan. Now, as they say, on with the show. What is the Martini Angle? The Martini Angle is a comprehensive walkthrough of the most up-to-date information regarding the real estate market and other information that one in the real estate arena really needs to know to simply and effectively communicate the current market opportunity and environment to a home buyer or home seller. In addition, the Martini Angle is curated to help educate the clients of the Martini Mortgage Group at Benchmark Mortgage and their partners and the real estate community on the aggregate with not just news, but the data that's behind a lot of the things that are happening in the market right now. Recently, there has been some headlines that could be alarming because some are talking about, wait for it, a potential recession. Please know, I do not write the headlines. However, I feel it is my duty, my responsibility, and my obligation to share the headlines, and because I think you need to know about it. It is undisputed, in my opinion. The expansion of this economy began in sometimes 2009. Again, it started but was not in very high gear in 2009. This economic expansion is the second largest in U.S. history. And according to the Wall Street Journal, 59% of private sector economists said expansion would likely end in 2020, when expansion ends, the recession could rear its ugly head. Now, if my memory serves me right, there was a ton of speculation that there would be a recession in 2011 and 2016 too. One headline should not cause panic. However, I want to take a moment to share what the definition of a recession is. A recession is a period of temporary economic decline during which trade and industrial activity are reduced, generally identified by the fall in GDP in 2 successive quarters. Now, I believe there will be a recession in the U.S. economy. I do not know when, but it is natural. Will it be in 2020? Will it be in 2022 or will it be in 2019? Again, I do not know, and no one really knows. However, it is critical to share to make sure you understand that a recession does not mean that we're going to have another housing crisis. I want to make sure that if you are listening or you are watching this episode of the Martini Angle, that you do not equate the word recession with housing crisis. Now, it is a fact. The last recession was caused by the housing crisis back in 2008. Again, recession means economic slowdown. Recession does not mean it's about housing. Let me say it one more time and keep it in front of your mind. Recession does not mean housing crisis again. I am fearful that people will relate these two terms, and they should not. You see, in 2006 and in 2007, people were using their house as an ATM. They used their equity to buy a car or go on vacation. However, today, we are seeing rising prices, and this is partially because people are staying in their home longer. And this is giving more time for the home to appreciate. And they are being much more responsible with their equity. In addition, those designer loan programs really no longer exist anymore. You know, the ones that required no verification, or the ones that offered some negative amortization options. I want to talk to you about home affordability for a moment. The State of the Nation's Housing in 2008 report was released by the Joint Center of Housing Studies at Harvard University. The big headline from this report was housing affordability. However, the main focus was on the folks that are in a current rental situation today. This report was from 2012 to the end of 2017. There is no question, during this period of time, 2012 to 2017, the monthly homeownership cost, in other words, how much it costs to own a home, it went up. Now, if we look back at the same data from the previous reports from the Joint Center of Housing Studies at Harvard University, all the way back to 1987, we will see where we stand today, and it's still lower or equal to every year except 1993. Yes, how much it costs to own a home has gone up over the past several years. That's not a newsflash. However, it is still lower. The monthly cost is still lower than it has been from 1987 all the way through 2008, except for 1 year, and that exception was 1993. Friends, it is my opinion. Home affordability is half full, not half empty. According to research from Zillow, historically, it cost 25.8% of income was needed to afford a medium rent, and today it is more expensive since it takes 28.8% of income to afford the medium rent. There is a cost of renting versus buying. Now, Zillow looked at the percentage of income needed to afford a medium home. Historically, 21% of income was needed, and now it's less since it's only 17.1% of income is needed to afford a medium home. Now, where are home prices going? Over the last 12 months, according to CoreLogic, home values are up 6.9%, and they are forecasting over the next 12 months that home values will be up 5.3%. What could this mean? Let me explain. If you are looking at a $250,000 home to buy today and you think you should wait to buy until next year, according to the CoreLogic prediction, that $250,000 home today would be worth $263,250. Now, I have a feeling that mortgage rates are going to be higher in 1 year from now, and Freddie Mac has shared they think that a 30-year fixed mortgage rate will start with a 5 in less than 12 months. So waiting to buy will not only mean you have to pay more for a home, but you will also have to pay a higher home loan rate. If the right thing for you and your family is to purchase a home this year, then buying sooner rather than later could lead to substantial savings. Call the Martini Mortgage Group at Benchmark Mortgage, which is located in Raleigh, North Carolina at 919-238-4934, so we can get together to evaluate your opportunities. If you are currently in a starter or a trade-up house that no longer fits your needs and you are looking to step into luxury, now is the time to list your house for sale and make your dreams come true. Thank you. Thank you for tuning in to episode 12 of the Martini Mortgage Podcast entitled Martini Angle, July 2018 edition. Remember, if you or someone you know has questions about Raleigh home loan rates or Raleigh mortgage products, we are here. Simply give me or Alex or Logan or Brad a call at 919-238-4934. Always keep on the radar. It's not about how big the house is. It's about how happy the home is. And know that our family is your family lender.
Thanks for listening to the Martini Mortgage Podcast with mortgage strategist Kevin Martini. Don't forget to follow us on Instagram at Martini Group and check out our website at martinimortgagegroup.com. Tune in next week for another episode of the Martini Mortgage Podcast. The information contained in this podcast presentation is for general product information purposes only. Arklatex Financial Services, LLC, NMLS number 2143, doing business as Benchmark Mortgage, makes no representations or warranties of any kind expressed or implied about the completeness, reliability, suitability, or availability with respect to the information, products, or services. All loans subject to borrower qualifying. Other restrictions may apply. Branch Manager Kevin Martini, NMLS number 143962. Branch located at 5650 Six Forks Road, Suite 101, Raleigh, North Carolina 27609. Contact the branch by calling 919-238-4934. Equal housing opportunity.